Hi everyone, this is Jack Ma with Century 21. Good to see you guys. Today I'm going to do something different. Let's do some data dive on the impact of the commission rule change and then also the interest rate. We're going to look at some data from the last couple of weeks. And as you guys know, I do track my numbers on a weekly basis. So this actually allows me to monitor the market really closely. But it's gonna be data, so hopefully, I don't bore a lot of you out. Okay, so here I got, so this is the data I've been tracking for years. These are basically 10 mile from our Walnut office. So basically that covers North Orange County, east side of San Gabriel Valley, a part of San Bernardino County, and that's pretty much where I work. So if you have any referral coming out this area, or if you know you're looking to buy or sell in this area, please let me know. Okay, and so the first graph we're going to see is the number of new listing, and that this one is the number of active listing, and average days on the market and pending sales. These are all important data to know, so we know what direction the market is going. So first of all, a couple of things. The small X here on each chart that marks the date or the week when the NAR settlement, that commission rule change took place. So that was on, I believe this is the data for week of August 19th. The rule change happened on August 17th. And the circle one is when we saw it's a week before the Fed announced the interest rate cut. And not sure if you guys know, but usually before interest rate cut, the mortgage rate will actually drop ahead of time because they always bake the expectation of interest rate drop in there. So we usually see that before the actually rate cut happens. And so with these two data, we can kind of gauge what we're seeing in terms of how these are affecting the market. So let's take a look at the NAR changes first. So the one with the X mark. So since the NAR changed, it definitely had an effect on the market because we saw there are less listing coming on the market. I think one of the reasons is probably due to even us realtor during that stretch, we're all shuffling like how there's so many changes that happen that's taking effect that week. So we're really just trying to figure out what to do. And so a lot of the real estate agent basically got sidetracked a little bit, and we're trying to figure out what to do, and then that's why we're distracted from taking more listings, so to speak. So I think that's the reason why we see this dropping. And so and then we did see a big drop. Same reason for big drop on the pending listing. So that's number of homes that actually went in escrow. This is a good indication of demand on the market. So we saw since that drop, if for 2-3 weeks in a row, there are less homes sold. So that NAR change definitely had an effect with the market, causing less activity to going on in the market. Whether it's because realtors are shuffling to figure out what to do, or buyer are resisting, what, I don't want to sign the agreement. Basically changes. Things change. People are resistant to change, and I think that's one of the reason. And but overall, we can see if we don't look at the interest rate, it's having this NAR change. It's causing the market to slow down. Basically, we're seeing listing taking longer to sell. We're seeing a decline in new listing. Uh, and then decline in number of sales. So overall, I would say the NAR change has a effect. It's not as dramatic as most people think, but it still did impact the market in a negative way a little bit. And the other now comes to the red dots. That's, as I mentioned earlier, that's when the interest rate dropped for the first time in since earlier this year. I think in January, first week or second week of January, we saw interest rate drop below 6%. And logically speaking, we should see a huge increase in buyer activity because of that. Because for every 1% drop in interest rate, I'm sure you heard me say that, the cost of mortgage drop is lower by about 10%, and that's huge. Meaning that if you are taking on a mortgage at 7%, and you're paying $5,000 a month, if it dropped to 6%, then that's $500 less. That's equivalent to a car payment. So that's huge. So we were expecting with the interest rate drop, we're going to see market activity picking up significantly, but not quite the case. As you can see, even with with interest rate drop, probably has less effect on listing because it's affecting the buyer more. But we see for the first week, the number of pending sales went up, and then immediate following that, the pending sales dropped again. And so it's still early. We only have 2 weeks of data, but based on what we're seeing this week, it's kind of slow. So far, the interest rate drop is not presenting us the activity that we're expecting. And I mean, like I said, it's still early. I'll keep continue to monitor this and let you guys know what's going on. And if you ever have question on these type of data, let me know. I may not do this on a video weekly base, but if you want to find out how the market is doing this week compared to the weeks prior, give me a call. 909-610-5188. I'll talk to you guys soon. Bye bye.